discuss that action more with Harish Bihani. He's, of course, the Executive Vice President and Fund Manager joining us from Kotak Mutual Fund. Harish, hi, good to be speaking with you. It's been a while. The biggest news flow that we were tracking for the last couple of days was the fact that Kotak has reinitiated the, inflows in the small cap fund. What led to that? What's the rationale? Because when they were stopped a few months ago, of course, the small cap index was at lower levels, valuation were lower than where it is today. What made you reverse that decision now?
Sure. So there were several key points that we had thought through before reopening this particular fund. First is that we thought through in terms of the business cycle and post the events that have played out over the past couple of months, including the important event of elections that have passed by now. We're very clear that any changes done in the last 10 years that we're moving in a certain direction should continue to move in that direction. And so there's no change in the pace or the tempo of change that's happened over the past 10 years. In fact, it'll move in the positive direction even further. Second is in terms of the business cycle, we think that business continues to be in an upcycle. There are opportunities across large cap, mid cap, small cap companies when we look at the business cycle. And when we talk about business cycle, we look at many points. We look at profit to GDP. We look at the net debt to equity of companies, which is at a 15-year low. We would look at the balance sheet of the banking system, which is absolutely phenomenal at this point in time. So there are many, many factors which went into this particular decision. Essentially, we said that can we still identify ideas and deploy the large sums of money that we have in the small cap category? And the answer was yes. There were events that we thought through has played out. And so the probability of any event specific to India disrupting the market is low at this point in time. With that, we thought that it's an opportune time to reopen the fund.
Right, Harish, so like you're saying, it's an opportune time to actually see, and you see some value. There is some place that you find in the small cap. So where is it? Which specific sectors, any specific names you are looking at on the small cap then?
Sure. So we are looking at opportunities across many segments, but most important is the healthcare segment where we are looking at more opportunities. These are companies generating exceedingly good free cash flows, not trading at very high valuation in the context of the growth that we look at 3, 5, 10 years out. And the big point is this, that when you look at India's journey from a 3.5 to a $10 trillion economy over the next 12 to 15 years, give or take a couple of years more or less, there'll be many, many small companies that will become big in size. These will be in certain sectors, certain thematics, which is ongoing at this point in time, or new themes will emerge. And so our entire intent is to identify those themes and ideas should become big in size. Amongst those, healthcare is one particular theme where there are many companies across the hospital space, diagnostic space, pharma space, especially related to the domestic pharma names, which are doing exceedingly well as we speak. And these aren't as expensive as the aggregate small cap or mid cap basket. We would look at names in the auto ancillary space. When you look at the capital goods names, those are trading at very high valuation. But you look at auto ancillary names, which are no longer pure auto ancillary, they are moving towards more value added engineering. Also, they are doing a lot of, they have moved into aerospace, some part of defense, etc. Again, though that particular pocket isn't as expensive as the capital goods name. We are looking at the construction name very carefully. We are looking at the entire consumption names. Consumption as a theme, it hasn't played out over the past couple of years. There are pockets in those where things are recovering as we speak, and we have seen sharp movement, sharp uptick in stock prices as those recovery takes place. So we have eyes on this particular theme, which should do well when India grows from a 3.5 to 10 trillion. There are near-term headwinds which should go away in the next 6 to 12 months. So again, another important sector that we are looking at very, very carefully.
That you're watching out for. But Harish, how difficult it is right now to differentiate the FOMO, the froth which is building up versus the fundamentals, because whatever is a good idea right now, everybody is latching onto those with both hands. How difficult it is to identify those ideas, and if there are some risks within the segment, what are those risks? Is earning is the biggest factor to watch out for, or do you think it's the valuations which have become expensive, which might make some of these stocks fall under their own weight?
Sure. So one has to be careful in terms of identifying sectors where the multiples have moved to a level where, as you rightly pointed out, there's a fear of missing out. So what we are doing actively is to look at those sectors, those stocks where there's a FOMO today and trying to take money off the table. Vice versa, there are themes, there are names which will do well longer term in India, but there's no FOMO in those themes today. So just keep concentrating on that. Maybe become a little early in those themes, get into those themes a little early, and then those themes should highly likely do well over the next 3, 5, and 10 years. So you're rightly pointing out there's FOMO in some themes. We'll have to be careful in those.
On that note, we let you go. Appreciate you.
If you like this video, then like, share and subscribe to ET Now.